Hi, Michael. Thanks for being with us today.
It's great to be here.
To begin with, I'd like you to give us a brief overview of your company and your technology and services.
Yeah, so we are an education technology company. We provide technology solutions focused primarily on the K through 12 marketplace. We sell typically at the school district level. So we go in trying to install and provide services that are large installations. We sell through channel partners. We have over 500 channel partners throughout the world, about 300 in the US, about 200 internationally. And we have a broad suite of solutions that include various hardware solutions and software solutions, and also services, including support services and professional development and training, those types of things.
Now, you reported revenue up 14%, more than 11 million in the third quarter. What were the main drivers behind that growth?
Yeah, so we saw nice growth in Q3, and also for the year. For the year, we were up about 7% for the year. Not nearly what we did last year. Last year, we grew about 50%. So we slowed a little bit. We think that's going to pick up next year. We're going to have another banner year. But really, the growth drivers are us having an outstanding sales team and also an outstanding partner network, channel partner network that's out there telling the story about what we offer, and we're seeing great adoption.
Tell us what you believe is the essential value proposition for investors, Michael.
Yeah, so I think there's a couple of things. So one, we have a very talented management team. It starts with our CEO, Mark Elliott, who came from Apple Education. He was number 2 there. He left Apple and joined a company by the name of Promethean, which is a competitor of ours. And he joined Promethean, and we're doing about 5 million in sales, and he helped them grow north of 350 million in sales globally in about 5 years. And so he's a guy that's very well known in ed tech. I could say the same thing about our head of marketing and our head of sales and our COO and our CFO, all talented individuals, most of which have spent a couple dozen years in ed tech at really great companies. I think secondly, I'd mentioned that we have the most comprehensive product suite in the market, and we think we have the best software that also helps these educators to be successful in the classroom. Our total solution that we offer includes hardware and software and services. On the hardware side, we sell interactive displays and various accessories. On the software side, we sell software that allows for the school district or the educators to create lesson plans and share those in the classroom, but also they can interact with the students and have collaboration in the classroom, as well as we provide an assessment app where they can assess amongst many other tools. And then lastly, in services, we have services that wrap all of it together, where we go in and we train the teachers on how to properly use the technology in the classroom, and we support the solutions in the classroom on a go-forward basis. So that would be on the solution suite. And then lastly, I'd mention that we have some great reference sites. We've won some very large school districts across the country as well as internationally. A couple of quick examples. One is San Diego, which is one of the top 20 school districts in the country, and they're standardizing on us for their interactive flat panels. That's a 7,000 classroom opportunity that we're installing over 5 years. We also won a large school district in Clayton County in Georgia, and that was a 3,200 classroom opportunity. That was a $12 million contract that we completed last year. We won Beaufort County, which is a couple-year contract that we're completing now. That's in South Carolina. So I could go on, but we have a lot of really great reference sites. So I would say we have an outstanding management team. We have a very good product suite, which we can compete with anybody, and we have reference sites that allows us to go out and continue to sell.
How big is the education market? What's the opportunity here for you?
Yeah, most research that you look at puts it at several hundred billion, and it's growing very quickly, double digits internationally as well as in the U.S. And we don't play in all of that necessarily, but we potentially play in up to maybe a quarter or half of that number. And it's growing. It's expected to be $1 trillion in the next 3 to 5 years by most research reports. So we're a very small part of that total ed tech spend, but we're trying to become a lot bigger.
What does 2020 look like for you?
Yeah, we think 2020 is going to be a great year for us. We're seeing good growth in our existing pipeline that we manage very closely. We're seeing good growth in our sales team as well as with our partner network. And then also we've launched some new products that we think will be very successful, including we launched a new audio product this year, which we're going to start selling next year. And that audio solution we think should be in every classroom in America as well as internationally. But we expect to do several million in sales in that new product next year. And then also, we're winning opportunities, including a good example is we were recently added to the New York City contract to where New York City schools can buy our interactive displays as well as other accessories. And we think that's a several $1 million opportunity next year. So if you take our existing pipeline plus these new opportunities, we're expecting double-digit growth next year.
Why are you chosen over your competitors?
Yeah, so as you can imagine, ed tech is a very competitive landscape, especially selling these interactive displays and the accessories and services and software. And so a lot of the opportunities we go after, we're competing against, a dozen or a couple dozen or more other providers. And so it's a long process, often a long sales cycle, and you have to get in there and convince the school district, the superintendent, and the superintendent's office and the board to select you. And we think the reason we're winning, and we win way more than we lose, by the way, we think we're winning because we have a management team that will stack up against anybody that can provide the right support and the right messaging. And then also we have a better product suite than our competitors. And again, it's a more comprehensive product suite. So we don't just sell a display, we also sell all of the software that you need in the classroom. We don't just sell that, but we sell a lot of accessories, and all of those are integrated into the software. And we don't leave the schools hanging. We go in there and we train and we support. We are a total solution provider, and many of our competitors don't stack up against us in that total solution.
Now, you have several analysts covering you. Let's talk about some of that coverage and their price targets.
Yeah, so we have, so this year we picked up research analysts with National, which was great. They started covering us, National Securities. Alliance Global Partners started covering us this year, which was great. Maxim covers us, as well as Hunter Diamond at Diamond Equity Research and Taglis Brothers. And so in the last maybe 12 months or so, we picked up a lot of research. We're very proud of that. And the price targets all have us well above where we are today. Right now our stock is trading just over $1. We think that we ought to be multiples of that. We're approaching about 40 million in revenue this year. And so at just over $1 per share, at about 11 million shares outstanding, we're trading at a severe discount to our revenue. And we think if you look at our competitors, or if you look at some of the comps in the industry, we ought to trade at a multiple revenue. So I think that's an opportunity. And the analysts that cover us, they put us at consensus well above where we are.
I believe that consensus is in the $4 range.
That's right. That's right. Yeah.
Now, to recap today, again, what's the main takeaway for investors?
Yeah, so I think number one, where our stock is trading, I think potentially a good entry point, right? If you believe in what we're saying and you believe that we can grow and be a lot bigger, then I think that's important. I think secondly, in addition to what I talked about with the management team and the product suite, another important takeaway is our gross profit margins have been improving. Now, we were a 24% gross profit margin business last year. We're a 30% gross profit margin business this year, and that continues to improve because of improvement in our product suite. And then I would add that our management team, being experienced as they are, all of us are not planning on being a small company. We all believe we can be a much bigger company, and that's our goal. And along the way, even though we've been losing a little bit of money, we're also planning to turn to profitability as soon as next year. That's another thing on a cash flow basis, as well as on an adjusted EBITDA basis. And so I think the main takeaways would be management team, we're expecting high growth, improving margins, and our stock price is trading, we think, at a discount, so potentially a good entry point.
Excellent. Thanks for being with us today, Michael.
Great. Thanks for having me.